Okay, good. Recording. So,
Okay.
in the last class, we discussed about the types of candle formations. We discussed about the bearish implication candles. We discussed about the bullish candle formations. So, in this week, last week we discussed about just single bar formations. That was we have the bullish pin. We have the bullish mariposa or maybe the bearish mariposa candle. And then we discussed about the bearish candle, bearish pin. That is something like this. And then I told you what makes this a potential bullish pin and then a bearish pin. So if you can just recall me, I want to recall me before we move to the next double candle formations. What makes this a potential bullish pin and what makes this a potential bearish pin, right? What are one of the characteristics you should look at whenever you see this? How can you know? How can you examine, or how can you know to know this is a potential bearish pin bar or a bullish pin bar? What are one of the characteristics you should look out for?
Okay. It was a question, sorry, Alan.
Yes, I'm asking you a question. What are one of the characteristics or the major characteristics you must look out, you must find out, you must examine, you must investigate whenever you figure this kind of formation on trade chart?
Okay. Yeah, we should measure more or less the length of the leg and understand if it is higher than 2 times the body.
Yeah, that means if this head right here, which is the body of this candle, if it is 10, then this tail must be at least times 2. That should be 20. Likewise, if this tail right here is 10, then this head must not more than be 3. Maybe so it must be times 2. So that is actually how to know if this candle is a potential bullish pin or a bearish pin. So what we're going to be discussing about in this class is about the double candle formation setup, and we have various kind of formations. So we're going to be discussing about the engulfing bars candle. We're going to discuss about the engulfing bar candles, and we're going to discuss about the bearish candle. So I'm going to show you an example right here. This bullish engulfing bar. This okay, I'm going to separate it right there. We have another candle right there. Okay, we need more space to work right here so we can actually make the drawing for this, so we don't. Okay, right here we have one, and then right here we have another one, and then right here we have another one. So let's quickly discuss about these candle formations on our trading chart. Let's quickly discuss it. So this first candle right here is what is called a bullish engulfing bar, and the second right here is the first, this is the second, this is the third. Why this right here is a bearish engulfing bar? Why this because you said because go on.
Yeah, the second one, you have a candle that has a body that is higher than, bigger than the bullish candle, and is completely engulfing it. And this is an indicator of a bearish trend.
Yes, good. But make sure you find this at the support, at the resistance zone. Resistance right here is a resistance. Okay, right here at support. You get that? So let's put this. You find this at support. You find this at resistance. Okay. So right here, this is a bullish engulfing bar, engulfing after a downtrend, engulfing the last bearish candle right here, which is a signal of a bullish upward tendency. And right here on the next right here is a bullish engulfing bar. Now I showed you the spelling bullish. That is bullish. Why this is bearish? Oh, sorry, this is bullish. This is bullish. This is bullish. This is bullish. B-I-double-L-I-S-H, bullish engulfing. When something engulfs, it means it covers, right? You got that?
Yeah.
It covers. Engulfing bar. B-A-R. Engulfing, bullish engulfing bar. Why the second right here is called what?
Bearish engulfing bar.
Bearish engulfing bar. Okay? Bearish engulfing bar. So whenever you find this on your trading chart, it means the trend, upward trend, is about to change to a downward or trend. You might find this at the resistance zone. And then the third right here, what do you think this is going to be called?
Well, this is these are two bullish bar. I don't know how it's called. This is the. No, I don't know how it's called.
Okay, this is simply means an inside bar. An inside bar. Okay?
Okay.
This is an inside bar. This is the mother bar. This is the mother bar.
Okay.
Why this is the baby bar? It's just like an image of a pregnant woman.
Yeah.
It's a baby bar.
Which is the trend that indicates?
This candle formation right here, it actually functions for two types of trend. You know, right here, you know, this candle engulfing right here, it functions for reversal of trend in an upward movement. Okay. Why this right here? Why this candle right here functions for a reversal of trend in a downward trend, whereby this inside bar can either function for an upward trend or a downward trend. But take note, it all depends on the direction of the previous trend. So I'm gonna get this off now so I can explain properly for you. This is an inside bar. Inside bar. So I'm gonna wipe this off so I can explain properly the inside bar. After that inside bar have different kind of variations. So the first one right here, we have this. And then this we have. So can figure out this right here.
Yeah.
This means after a bullish trend, okay? That means trend have been moving up in a bullish trend, in a bullish rally, and then here forms a bullish candle right here, and then there was a gap down, then forms a little what? Baby bar. Remember, this is the mother bar. Why this is what? The baby bar. So after this formed on your trading, hang on.
Yeah. Sorry?
Okay, sorry, I have a message. Okay, that is off. Okay, so after we have this bullish engulfing bar right here, okay, we now have an inside bar. Remember, this is an upward trend right here. Okay?
Yes.
This is a previous trend, an upward trend. Okay? Then we have a bullish engulfing bar, then we have an inside bar. So whenever you figure out this on your trading chart, it has high probability of price to make a breakout. So what you should look out for right here is to look for breakout of price above right here. So you trade this inside bar according to the previous direction. So let's say, for example, you have been buying in a trend like this, which has been going up in an upward trend, and then you find this kind of formation in your chart. It is an opportunity for you to add to your trading position. Let's say, for example, right here, you have a 0.10 right here, and the trend keeps on moving your direction in your favor. And then when the trend gets right here, you have a gap down, and the price carve this inside bar, baby bar right here. So it's an opportunity when you to place a pending order right here for another buy. You can make your buy to be something like 0.5. That means you are adding to your position. So it's a breakout strategy for continuation of trend. continuation of trend to the upside. So this is an inside bar. Now let's say, for example, this right here can also form like this sometimes. Okay, sometimes the color may be the same color, while sometimes the color may be a different color, like we did have right here. Okay, why sometimes you can also have one like this. So these are the 4 types of variation of the inside bar. I'm gonna tell you their characteristics. So right here, this is the first, second, third, fourth, right here. So this is the other variation of their inside or bar. All these bar right here, they are an inside bar. Okay.
Yes.
An inside bar. It means this small bar, they are inside of this big bar. You can see all these small baby bar. This is their mother bar, their mother bar, the mother bar, where we have the baby bar inside the baby bar, inside the baby bar, inside, just like a pregnant old lady. Okay. So yes, right here, it's a bearish and a bearish bar right here. After the price make an upward rally, we have a gap down. You know, we have a gap down this zone, and then price closed low than the close of this candle. Remember where we have this is the close of this candle, this is the opening of this candle. Don't forget that. Whereby this is the opening of this candle, this is the close of this candle. Whereby this is the opening of this candle, and then this is the close of this candle. Do you remember that?
Yes, yes, yes.
Whereby where is the opening of this candle and the close of this candle?
So of course the upper part is the opening, and the lower part
is the close. Good. So whenever you figure out this on your trading chart as an inside bar, if the trend is an upward trend, if the previous trend is an upward trend, what you need to look out for is to take the trend at the breakout upward. Okay?
Okay.
It's a breakout strategy candle formation. So it's to take a breakout up whenever you figure out this on your trading chart. Sometimes, no, you look out for this at a potential resistance zone. Let's say this is a resistance zone right here, resistance zone right here, okay? Resistance zone right here. And then this formed, you can just put a pending order above that resistance zone. Like this right here, you can put a pending order above that resistance zone. It's a breakout strategy. Or it can also act at the middle of the trend. At the middle of the trend. Okay?
Yes.
I'm gonna show you the middle of the trend on our trading chart. Let's say, for example, we have this on our chart. Price keeps on moving like this. Here is the middle of the trend. This is the middle of the trend. Here is the middle of this uptrend. Middle of this uptrend. Middle. Here is the middle of this uptrend. Here's an uptrend. Okay. One of the candle formation you can figure out right here is like an inside bar. Whenever it formed, it means there is a movement, high probability of movement up. Right here, whenever it forms right here, it means an high possibility of trend to move, no, break up. Okay.
Okay.
So I'm going to reverse back to our previous. Okay. So this candle right here inside bar. So whenever you figure out this on your trading chart, maybe at the middle or at the extreme resistance zone, it asks for continuation at the middle or breakout at the extreme resistance zone. Likewise, this right here. So you trade all these candle formations accordingly to the direction of their movement. So now let's come back. Let's say, for example, we have a downward trend.
Yeah.
A downward trend in a downward trend. Let's now say we have a downward trend coming down like this. A downward trend. And this formed. You have to look out for trade opportunity at the downside. At the downside. A breakout down. A breakout down. But this candle formation you see right here, this candle formation there, this right here of same body, and this right here of same body, they all have a very significant role to play whenever you figure it on your trading chart. The reason is because of these two same body color. Whenever you figure out this on at the support or at the resistance or at the support or at the resistance, price have high tendency to break to the upside or to the downside.
Okay.
So let's say, for example, you figure out this at the support region.
Yeah.
If we have a candle closing above, I'm going to clean this off so I can explain this properly. You can understand it. Let's say, for example, we have this candle right here. We have this candle right here in a bullish trend. Okay.
Yes.
This is a bullish trend. And then let's say another candle now formed, which now have a close below this candle right here. Now let's say this candle right here is a bearish candle.
Yes. Then you broke the support.
And broke the support and then close below that support. This is the opening, while this is the close. So what actually formed right here is an indication that this trend is about to make a reversal to the downside.
Yes.
Because it has closed below the extreme no opening of this inside mother bar. Okay. Now let's say, for example, we have a close above this resistance zone right here of this candle. Now this is an indication that trend is about to move to the upside. Okay.
Yes.
Now let's view out the opposite right here. Same color. Same color. Actually, this is much stronger at where? Do you think it's much stronger? This is
Which one? Sorry.
I mean, this is much stronger whenever you see it, at the support. Very, very strong whenever you see it at the support.
Okay. Why?
Price, because this is a downward trend.
Okay.
And then you have a bearish candle like this. You have a bearish candle like this.
Yeah.
And then you now have a bullish engulfing bar engulfing this. Then you now have an inside bar. Number one, this, if you place this candle with this, neglecting this right here, what is this? This is a bullish engulfing bar. You get that? This is a bullish engulfing bar. And then if you relate this candle with the candle at the front right here, this is an inside bar. So you can categorize this as an inside bullish bar, as an inside bullish bar. So whenever price break this extreme candle right here, it means price close above this bullish engulfing bar here and also this inside bar right here. So it's a very strong tendency of price to move to the upside.
Okay.
Likewise, right here, let's say, for example, we have price moving down in a bearish trend like this. Okay. This is a bearish trend, price is moving down, and then you have this bearish candle right here. And then you have another bearish candle right here. A close below this candle right here. It's also it also means
so you are breaking the support.
Breaking the support downward. That means all this candle right here, they are all a bearish candle.
Yeah.
Okay.
Yes.
So now let's say, for example, we have this candle right here on an upward trend. So we have this on an upward trend like this. We have a bearish like this. Then we have another candle which now formed. This is a bearish candle. This is a bearish candle. This is another bearish candle. Then we now have another candle right here, now closing above.
Okay.
You know, this is have already closed above this right here, and they close above right here. Okay. In our next class, this is one of the candle formation we're going to be talking about. We have some which are called the bullish IKK, the bearish IKK. Okay. The theory inside bar, we're going to talk about those in our next class. So now let's figure on these two candle formations so we can master this before we move to the 3 candle formation and the 4 candle formation setup. So just an introduction to this so you can figure out. So this is the role of this inside bar right here. So now let's make another drawing right here. Let's say, for example, we have this bar like this. We have this bar like this. We have this bar like this. We have another one like this in an upward trend. In an upward trend. We have a long bearish candle. We have another inside bar right here. If price should go below this candle right here to form another bearish candle, it means price
is relaxing.
Yeah, it's moving down for a downward or trend. So right here, for you to trade an inside bar, no. Number one, you have to look out for the previous direction of trend.
Yes.
This simply continuation, and then this. Oh, sorry. And then this. It means a downward trend. It can either be like this or like this. But sometimes this can serve as a reversal from a downtrend. Do you know why this may serve as a reversal from a downtrend sometimes? After a downtrend, what do we have? Are you right there?
Okay, this is an inside bar. And
then we have a baby bar, which is a bullish bar.
Yeah, and then we have to wait to break the support on the resistance to understand how the trend will go later.
Good. So that is how to trade all these candle formations. And then right here, if we have a downtrend, whereby this is a bullish candle, and then the next candle is a bearish candle, price have most high tendency to break downward because the baby right here is a bearish candle. Why right here, price have high tendency to break to the upside. Price also have tendency to break down, but it has the most high tendency to break up because the baby is a bullish bar. Do you get that?
Yes.
Do you get that?
Yes, yes.
Good. So these are the 4 kinds of variation of an inside bar, which whenever you are trading, you can get on your trading or chart. So whenever you see them, do not get confused. What you need to know is relate them to the previous direction of trend, and then check the inside baby bar, the color of the inside baby bar, and then relate it to the previous direction, and then where is it forming? Is it forming at the support? Is it forming at the resistance?
Alan?
Yes.
You are not considering at all the legs. There is a reason why you're not considering them?
I'm gonna give you the reason why I'm not considering. Okay, like we have a shadow like this, right?
Yeah.
Okay. Whenever you see this kind on your chart, let me show you. That is a good question. Let's say, for example, we have something like this, and then we have something like this, and then we have a leg like this. Is that not what you asked? Like this?
Yes.
Am I right?
Yes, something like that. Because you are considering just the body of the candles.
Yes.
These
Yes.
are.
Yes. This and this, they are the same thing.
Okay.
Right here, remember in our last class, what do we call this?
This is the leg.
A bullish prayer. A bullish prayer.
Ah, yes. Yeah.
So this means this is a bullish candle.
Okay.
This is a bullish prayer. So this means this is a bullish candle. So actually, I'm about to talk about an outside bar. I'm very happy you asked the question. Actually, I wanted to discuss an outside bar. This prayer right here on the next one, which is an outside bar. So now let's move to an outside bar. This is what we call an outside bar. Can have sometimes remember this we have a bullish engulfing bar like this, okay?
Yes.
It covers totally this body right here. But sometimes we're not gonna have a kind of bullish engulfing bar like this. We can have something like this, and then something like this, and then something like this.
Ah, okay.
This bearish prayer, a bullish prayer. So this is what is called an outside bar.
Okay.
An outside bar. An outside bar. So it all depends, on where you figure out this as well. So if you figure this out, maybe at the support of a trend, if price should make a close above it, it have high tendency to reverse such trend in a bullish rally.
Yeah.
Likewise, if this should formed maybe the support, and if the price have a close below this candle right here, it also have high tendency that price is about to make additional bearish trend more downward. So don't mix it up. Don't miss an inside bar, an outside bar with a bullish bar. This bullish engulfing bar. Sometimes you can have a bullish engulfing bar like this, while sometimes you can have it like this, while sometimes you can have it like this.
Okay.
Okay. And then there's another candle formation I want to show you. Sometimes you can have some like this, a two same length.
Yeah.
I see it. This is what we call this candle. Some call it a ray track. Ray track, the same length. And if you
how is possible? How is possible to have two candles bullish like them? Because the opening of both of them
after we have the open right there, price close right there, price gap down again, open right there, and close up.
And from the first to the second.
Yes. It does happen. It does happen in the market. So whenever you figure out this on your trading chart, you have to pay very close attention. Okay. If the next candle close above this candle right here, it's a strong indication of a bullish rally up. It means after the price close right here, the bearish make an aggressive movement without any trace of movement. Then the bulls defended back their zone. They defended back their region and make a close again up. So it means the bulls are very aggressive as well. They are not giving up. So a close of candle above this region right there means a strong indication of a bullish engulfing bar. I mean a bullish trend. And if price should close above right there, it's a strong indication that the price, the bearish right here, candle right here, they are trying to make a downward trend. And sometimes you can find something like this, like the opposite, like this, whereby this will be a bearish candle. It's different from, it's different from this one. Okay?
Yes.
These have the same color, while these have different color. The price close right here, price opening right here, and close right here.
Okay, so we are reversing the trend here.
Yeah, so if the trend is in a downward trend, it simply means the trend is trying to make a continuation downward. You can call this a bearish rail track. This an outside bar right here. It's just like the same thing, but not the same thing, because the mother bar is actually engulfing totally the baby right here. While right here, no one is engulfing each other. They are both at the same distance of length. So right here, you can call this a bearish rail track, because of the last candle at the front right here is bearish. So a bearish rail track. Whereby right here, you can call this a bullish rail track, because the last candle right here is a bullish candle. Okay? And sometimes you can find something like this. The same color. A bearish candle like this, and then another bearish candle like this. Price opened right here, it makes a close down. The boost comes in aggressively without any trace of movement.
Yeah.
And then they opened right here. And then the bears comes again and defend their zone downward right here. So if you have a candle close below right here, it is a strong indication of a bearish, very aggressive bearish trend.
Okay.
So that is all we need to discuss about the two candle formations or patterns. So in our next class, we're going to discuss about the three types of candle formation. That is the bullish IKK, the bearish IKK, and a lot of them. That is the three inside bar down, and the three upside, things like that. Okay. So after that class, we're going to discuss about the four more candle formations. I'm going to just give you some of the most important one right here. We have on the three candle formations, we have the three white soldiers, the white crows. Some of them which are very important, we're going to discuss about. And then I'm going to make sure we round up these candle formations this week, so that next week we can discuss about trend line constructions, how you can construct trend line on your charts, how you can construct dynamic trend line, horizontal trend line, how you can connect them from one point to another, how you can connect swings high, swings low, how to avoid candle trend line cutting through a body, or different kind of transformation, how you can use this trend line to form different kind of chart patterns like descending triangle, ascending triangle, symmetric triangle, and different kind of triangle formations on our trading chart. Okay.
Yes.
So like example, like what we have right here now. We have something like this right here on my chart right now. If I should show you something like this now on my trading chart, right here. Okay. You can see right here now, I have this right here. I constructed my line right here. So right here now, I can
support.
You said?
Dynamic support.
Yes, dynamic support, dynamic resistance. So in our next class, we're going to discuss how you can use this to actually draw different kind of formations on your chart by tracking record of price. Like example right here, we have a descending triangle. We have ascending or triangle on our trading chart. It's an ascending triangle. We have symmetric triangle. How you can connect all these swings right here, swings low, swings up. How you can actually connect them to form different kind of chart formation settings on our trading chart. We're going to discuss about the diamond, about the pyramid, about the rectangular box, about the triangular box, a lot of channel box, a lot of chart patterns on our trading chart. Okay.
Yes.
So thanks for your attendance in today's class. And then, do you have any question?
No, so far no, it's okay. Thanks.
So how is the network? Is there any
okay? The last two times is perfect.
Okay, yeah. I told you about that. Switch from the network. So In the next class, I want you as well to go through the video I'm going to send to you after this class. I'm going to make a recording, a copy of this class. I will send it to you as I usually do, so you can go through this class and view it. If you have any question concerning this class, you can always chat me up on WhatsApp or send your questions to my email. And then the previous class as well, last week, I'm going to send everything to you so you can go through at your time. And then our next class will be, that is Thursday, right?
Will be again, sorry?
And our next class is going to be Thursday. Am I right?
Yes.
Yes, so okay. And then the upper class will be Saturday, okay?
Yes, yes. Okay. May I ask you something that are outside of this candle discussion now? Okay. Because in parallel, of course, I'm playing with MetaTrader, and I'm trying to understand how to do a trade, and how the balance react when I do a trade. And what is not super clear to me is how to use the leverage. I mean, I'm already using the leverage when I put 0.1 or one lot of volume, or is something different, the leverage? If you can do an example, a practical example would be very.
You mean how to execute leverage on your trading account, right?
Yes.
Okay. Have you gone through the content I sent to you about leverage? What is leverage? Have you gone through the topic on my website, which I said you should literally leverage? Let's say, for example, this actually what leverage simply means on our trading chart. Let's say, for example, we have you on your trading account, you have €1,000. Okay.
Yes.
And then, on this €1,000 account, the maximum amount of money you should risk here shouldn't more than 10%. Okay?
Yeah.
Shouldn't be more than 10%. And what's the 10% of this trade right here? 0.10. That is the 10%. And if you are risking 10% right there, it means what you are risking, your stop loss should not be more than, your stop loss shouldn't be more than €100, right? Okay?
Yes.
So now let's say, for example, you want to take a leverage on your trading account. If you take 1.0 on your trading account, that is one lot, which is equals to 1,000 of your base currency you fund your account. Actually, it means right here, you are taking 100% of your account, right?
Yes.
Now, let's say, for example, we want to execute a leverage. Now, leverage simply means going above more than what you have in your trading account. Now, let's say, for example, right here, I now take a trade like 1.1.
Okay.
That means you have added to your position size, 0.1. That is 100. You have added 100 to your position size, which is more than the actual balance you have in your trading account. Now, let's say, for example, you take 1.5. That means we are taking €1,500 trade. Now, let's say, for example, you take 2 lots. That means you are taking €2,000 trade on your account. So that means you are taking a leverage. You are trading more than what you have in your trading account. Is that right?
Yes.
So that is it. Have any other question?
Okay, so every time that I use a leverage, I'm using the totality of my money, because I'm going above the balance, the balance that I have.
Whenever you are trading your account, it all depends on how much you have in your trading account. If you have 1,000,
let's imagine that I have €1,000, as you said.
If you have €1,000 on your trading account, if you trade more than one lot, it means you are using leverage on your account, because the total amount remember, in the forex market, we don't regard to 1,000 or 2,000, we call them lots. That is the terminology right here. 1,000 is one lot, why 10,000 is 10 lots, why 100,000 is 100 lots. No? Yes. So if you take more than one lot, if it is 1.01, you have taken a leverage of €10 on your account. It means you have gone more than 100% of your trading account. The 100% of 1,000 is 1,000. That is one lot. Do you get that?
And I'm risking what in this
It all depends on how much you want to risk. If you are risking 100% right here, it means, let's say, for example, on this account, you have 1,000 euro, and then you take 2 lots.
Yes.
You are taking leverage. Okay?
I do a trade with the 2 lots.
That is leverage. You are taking leverage. So it means if price should go 50 pips right here against you, this account will be blown up. You need just 50 pips. I'm going to show you on the trading chart what I mean by 50 pips. This right here. Let's measure this candle right here. Let's measure this candle right here. Let's say, for example, okay, good. Now, let's take this candle right here. Okay, let's take this candle right here. This candle right here.
Okay.
Let's say, for example, after you see a bearish candle right here, you think maybe price is going to continue to move in a downward trend. And then you have $1,000, 1,000 euro in your account, and then you decided to take a leverage of 2 lots. That means you have 50 pips for your account to be blown, to be wiped out. Now let's measure this. After you enter the trade right here, then let's count it. Then price keeps on moving backward, moving backward. Sorry, I'm gonna put this on the daily time frame. Okay, now at this zone, let's say this where the trend is right now, bearish candle, right? Okay. Now you think, okay, the price is gonna continue to do what? To move in a downward trend, downward right there. Okay?
Yeah.
Am I right? Now let's say we now have price got right here, and the price now move up, move up, move up, move up. When price get to this zone right here, can you see that?
Yes.
When price got right here, okay?
Yeah.
Can see that your total 1,000 euro is wiped out.
Okay. Okay. And how did you calculate with the 50 pips?